Hello. Today is April 11th, 2024. I'm Jason Shapiro with Crowded Market Report, and this is my thoughts on today's markets. So, PPI came out a little weaker than expected, and what we would have expected was the markets to rebound from yesterday. And that's pretty much what happened. But there was a few interesting things I thought in the action today, things that I kind of like to look for, and in particular in the Dow. Now, the Dow is where things are most crowded long. So if I were going to be short something, that's where I would be short. So it started with like here, this was the PPI, right? And like the market should have been ripping and it was up, but it was like giving you a chance to get in. And I call that, I was talking yesterday how there are certain rules to trading that I discuss a lot. This one is like beware of those bearing false gifts. Market should be up a lot. It's not. It's giving you a chance to get in. Well, when it's giving you a chance to get in, a lot of times you're going to wish you didn't get in. And if you did, look what happened. The market, this was pre-market, and as soon as the market opened, it just cracked, right? And so those false gifts of, here's a free buy here, crushed you. But then as the day went on, one of the other things that we talk about a lot on my Discord is this idea of the Nasdaq needing to lead the market over time. And this happens on a lot of time frames. It works particularly well intraday. So while other things were going down, the Nasdaq was the strongest, and the Nasdaq is the most volatile and the highest beta, and therefore should lead the market up or down. And it was leading up. Even as the market was coming off, the Nasdaq was holding, and it was stronger than everything else. And that's an indication that, you kind of want to watch it on the short side, and you really should be trading it on the long side, but you certainly want to watch it on the short side in that situation. So those are kind of two interesting things I thought, which are things that we look at a lot. But in the end, the Dow in particular, and like I say, the Dow is where specs are most long here. It ended up right where it started, flat on the day. So also interesting today was the fact that bonds went down today. We had a number that was theoretically friendly to fixed income, and we saw it rally and then fail. So there was kind of a market that didn't do what it should have done today. Dollar pretty much did as expected. It really didn't do very much. And of course, the metals just once again ripped higher, made new highs, new all-time high ever in gold, ever, which is still giving the message, in my eyes, that rates are somewhat too low. All right. And I want to get into that again because I know I harp on this a lot, but look, if they are going to keep rates here, or even people are going to continue to think that they're going to lower them, although that thought process is going away pretty quickly, but then these assets are going to squeeze higher. These inflation assets are going to squeeze higher, right? And the only way, it's funny because the more they squeeze higher, the less chance they can raise rates. Whereas if these assets were to go down a lot, whether it be stocks or anything, then they actually could cut rates. And that, to me, is the only, you want to build a story that they're going to cut rates 2 or 3 times? Okay, let's talk about the S&P down 20 or 30%. Then they can talk about cutting rates. You're not cutting rates, to me, with the S&P on all-time highs and gold on all-time highs and all this. So you want to build a story on where they're cutting rates? Let's watch assets go down a lot first, and then maybe they can cut it. The market will force them to cut rates by going down, right? My theory has been that the market was going to force them to not cut rates because they were going to keep going up, and that's kind of what's happening. I mean, look, the Nasdaq is like less than 1% off an all-time high here, right? It feels like the market's been going down for a month. Nasdaq's less than 1% off all-time highs, right? That's not a market that's going down. The market, people want the market to go up every day. That's not how it works. But just because the market's going up doesn't mean it goes up every day, every week, every month, even, right? But it's still going up from this point. So hard to argue against that, right? So again, what I keep hearing all day from people is that people are very bullish. Everybody on CNBC is very bullish, but still underinvested. You can tell because they're still hoping for a pullback that they can buy. This is the conundrum we are in. We continue to be in. This stops the market from going down very much. Okay. But, we have to see that there is data that can come out, like that CPI, that can push it down, but it just bounces right back up. And in particular, when the Nasdaq is leading, look, we saw yesterday the Nasdaq was even leading on the way down. We saw NVIDIA was up yesterday. Nvidia, and look what Nvidia did today. It rocketed higher. So that was, someone actually pointed that out. I think on one of the comments on the YouTube was, hey, Nvidia was up today. Is that a signal? Well, turns out it was a pretty strong signal, right? Up despite the market getting killed. And look what happened when the market actually went up. The thing ripped higher, right? So those are the kind of signals I like to look for. Markets that do what they aren't theoretically supposed to do, because there's a message in that. When a market does what it's just supposed to do, okay, there's no real advantage there. There's no tell. But when it does what it's something that it's not supposed to do, like Nvidia going up yesterday, like bonds going down today, right? To me, that's a much more powerful tell. It doesn't always work, but obviously helps you to see where the tell is in the market, which helps you build an advantage, which helps you start to build an edge. Okay. So anyway, those are the thoughts today. Always happy to hear questions and comments. Please like the video if you like it. Please check us out at crowdedmarketreport.com. All right. Thanks and have a good day.